Right now, Vancouver real estate feels like it's at a breaking point. Prices are down 8 to 12% from the peak. Inventory sitting at over 17,000 listings, 40% higher than the 10-year average, and luxury homes have been slashed 15 to 25%. But here's the catch. Unemployment in BC just spiked. Trade war tensions with the US are rattling buyers, and nearly half of Canadians are putting their plans on hold. So the question is, do you buy now and lock in a deal, or do you wait and risk missing out when the market eventually turns? Today, we are unpacking all the data, forecasts, risks you need to know before making your move in Vancouver real estate. And make sure you stick around until the end, because I'll be breaking down which buyer types should act right now and which ones are better off waiting until 2026. If you're a first-time buyer, move-up buyer, or you're even looking at luxury, you'll want to hear this before you sign anything. So let's get into the data here right away. So we're just going to do and start with an executive summary here, as you can find, and then this is going to give us our framework. So here, in terms of the key findings, 2025 represents a buyer's market with favorable conditions for well-positioned purchasers, while 2026 may offer even better opportunities as market conditions continue to evolve. And that really comes down to the record number of mortgage renewals coming up in 2026. These are going to be the last type of over-leveraged sellers that have no choice but to sell, because they will not be able to have a doubling or more than a doubling of their interest rate. My primary recommendation for most buyers is waiting until late 2025 or early 26 is advisable, as prices are expected to continue to decline and market conditions are likely to improve further. And selective opportunity. Buyers with strong financial positions and long-term investment horizons may find selective opportunities in the current market. And that's totally where I am seeing the best value. Those who have their financing order, money in hand, so not subject to sale. Yes, you can get subject to sale offers and acceptance on those offers, but the issue is you're not going to get that clean value. If you are subject to sale, you're going to leave some money on the table in terms of your negotiation. So if you can sell first, have your money in hand, come up with quick closings, come up with shorter subject removal time, you can definitely get a lot more bang for your buck. So finally here, Vancouver's real estate market is experiencing a significant correction driven by multiple converging factors, including the trade war. I know that Mark Carney just reduced some of the retaliatory tariffs on the weekend here and at the time of filming to try to get back to the talks with Donald Trump. But, you know, that is the uncertainty that we're living with right now. Employment challenges, which I highlighted in my previous video, reduced immigration, high inventory levels, and ongoing affordability concerns. As we come to current market conditions, we know that the real estate market here in 2025 has experienced a significant correction that has been accelerated through late 2024 into 2025 here, and obviously a fundamental shift from what we are used to here in Vancouver, from the seller market conditions through to the buyer market conditions that we're seeing here. Highly favorable for buyers. The market is characterized by high inventory levels, declining prices, and reduced transaction volumes, and then the ongoing US-Canada trade tensions have created widespread uncertainty. I have read a stat this morning about mortgage originations across Canada, how they continue to improve and advance. So that does show that buyers are willing to come up, and most of those mortgage originators are first-time home buyers, which this is just the perfect market for you if you are in that space. Today's market offers ample choice for buyers, extended marketing periods for sellers, and increased negotiating power for purchasers willing to enter the market. So for a buyer, you can take your time. You have favorable terms within your negotiations, not just in price, but also the subjects and terms within the contract as well. When we look at the price trends and market activity here, and we have the charts between residential, condominiums, townhomes, single family, and the luxury spaces here. And this is just a chart just showing the drop that we've seen since 2024. So Vancouver home prices have been declining steadily through 2025, with the benchmark price for all residential properties falling approximately 8 to 12% from peak levels in early 2024. Transaction volumes have also decreased in that 15 to 20% mark, below the 10-year average, indicating reduced market activity and buyer hesitation. And then the luxury market has been hit the hardest. And you can see here on the graph, approximately a 20% drop on average here. Anything above that $3 million mark is seen between 15 to 25% in many cases. So again, this chart here is just showing some of the declines we've seen in terms of percentages of pricing since 2024. And, the attached market, with townhomes, they've fared the best out of all these segments here. But the luxury space, single family, and the condo market, especially downtown Vancouver, has been suffering a great deal. When we look at these inventory levels and the market balance here, you can see that current inventory levels in Greater Vancouver are well above the 2 to 3 month associated with balanced market conditions. So we're at that 4 to 5 months of inventory. There were some stats as high as 6, so it would take around 6 months of inventory just to get your property sold, which is way more favorable for the buyers. When we look at days on market, and it says here on screen 60 to 80 days to sell a property as opposed to 30 to 40 days in 2023, this is not really correct. In BC, you can manipulate these days on market. If you terminate a listing, cancel a listing, things of that nature, you can actually reduce the calendar. In Alberta, for example, that clock continues to run. What I've seen, I would say this number is probably 150 to 200 days plus is what you're seeing on market. So this is what you would see on the media side of things, or what you would see on that DOM on the MLS sheet. And this is the data that it scrapes from it. But in reality here, it's much higher. It's double that, possibly even triple that in terms of the cases of what I'm seeing on the market here. When it comes to condo supply, even more so, months of inventory, 6 to 7. So a little bit higher than the 4 to 5 on average, 6 to 7 months of inventory in condos in the downtown Vancouver and surrounding areas. So if you're willing to live in some of these urban areas, that is where you can get some great value here. When we look at some of the regional areas across Greater Vancouver, what we're going to see here is some areas for you to get some great opportunities. So downtown Vancouver and Cole Harbour, most significantly impacted by reduced investor demand and foreign buyer restrictions. Condo prices have declined 10 to 15% from peak levels, with luxury units experience even greater corrections. West Van and North Shore, substantial price corrections for luxury properties. The fundamental appeal of these locations for affluent buyers remains strong, and well-priced properties continue to attract interest. So North Shore has always been quite competitive post-COVID. In some cases, still seller market conditions in duplexes, some single family. But on the luxury end, on these West Van and North Shore markets, you can definitely get into some great value. Richmond and Burnaby, more moderate price declines reflecting their appeal to families and relative better affordability. Richmond particularly affected by foreign buyer policies. And then when we go to the burbs, Surrey Langley in the eastern suburbs, most resilient markets with smaller price declines and continued activity from local buyers seeking affordability, ongoing transit infrastructure development supports, and long-term value. Before we get into the forecasts and predictions, if you are thinking about buying or selling in Vancouver, don't try to figure out this market alone. Book a private discovery call with me today. Scan the QR code in the banner, click the link in the description below, and we can walk through your exact situation and map out the right strategy for you. So institutional forecast here, the CMHC forecasts Canadian home prices will decline by approximately 2% in 2025, with larger drops expected in BC. RBC anticipates national home sales to decline by 3.5% this year, followed by a 7.9% rebound in 2026, which I don't know if I necessarily agree with that. TD offers a more pessimistic outlook, forecasting a 3.2% decline in national average home sale prices in 2025. So we see all of the big banks here, showing exactly that they were right in terms of what they were forecasting here. And I think 2026 is going to have continued pain on that same trajectory. Industry perspectives, CREA, the Canadian Real Estate Association, projects national residential sales for 2025 to drop by 3%. BC REA, that is the British Columbia Real Estate Association, notes that trade-related uncertainty upended hopes for a more normal market through the first half of 2025. And I would agree with that statement wholeheartedly. We all thought that 2025 was going to be a very strong real estate market, and that just was not the case. And you can track it essentially when Trump started to get him into office, started talking about tariffs and trying to get on board in terms of making things more quote unquote fair between the two countries. That's when we saw buyer hesitation really be held up, and why sales really started to stall here. 49% of prospective home buyers have put their plans on hold due to the U.S. trade dispute, and there was a study done by the Bank of Canada at the end of 2024 that showed about 30+% of renters or people who were looking to get into the market wanting to transact in 2025, and that has essentially completely flipped. So the consensus among experts points to continued market market softening through 2025, followed by a gradual recovery beginning in 2026. We do have the high probability of, at least one more rate drop now here in September. I don't know if I, fully agree with this with the institutional and industry perspectives. I think 2026 is still going to be a very similar year to what we're having, unless there's some major change between the Canadian and US relationship. Economic factor analysis. So employment challenges. BC experienced a sharp reversal in employment trends during July of 2025, shedding over 16,000 jobs and seeing unemployment rise to 5.9%. Youth employment rate has reached 14.6%, the highest since 2010, excluding pandemic years. So that is a huge cause for concern. Anyone who's trying to get up in the market, the youth unemployment rate, that is frightening for sure. Interest rate environment, the BOC has maintained its policy rate at 2.75 since March of 2025. 5-year fixed mortgages rates are currently in the 4.5 to 5.5 range. I do think that's a little high. I did have a client come through and just say that he was able to lock in with TD at just under 4%. I'm looking to renew my mortgage right now. Scotia's saying that they can get me around like a 4.29 on a 3-year fix. And then significantly higher than the sub 3% rates during the pandemic period, obviously. With immigration, the federal government has implemented substantial cuts to immigration targets, reducing a key source of housing demand, and Vancouver has historically received a disproportionate share of new immigrants. And then finally, I'm not going to beat this up. You can see it on the screen, the trade relations here. We know what's going on there. So the case for buying in 2025, improved affordability and selection. The current market correction has created the most favorable buying conditions in Vancouver in several years. Prices have declined 8 to 12% from peak levels. Inventories increased substantially and buyers have significantly more negotiating power. Long-term value proposition. Vancouver's fundamental value proposition remains intact. Despite current market challenges, the city's geographic constraints, desirable climate, economic diversity, and international connectivity continue to support long-term real estate values. And personal circumstances. Buyers with specific personal circumstances may find compelling reasons to purchase despite market conditions. These include buyers relocating for employment, families needing larger homes, or individuals whose rental situations are unstable. So these are some of the cases buying here in 2025. And like I said, there is going to be opportunity in 2026, but as we get into this fall market, we also know that after, the fall market, which historically is busy, buying in that winter market from November to February, you can get a great value. But as you start to get into 2026, you're getting closer and closer to those mortgage renewals evaporating, and there's not going to be as many pain points. Right now, we're going to see a ton of pain points. If you are actively looking on the MLS, you'll see some sales or hear about sales if you're actively looking of some really good value. And it's likely because that seller had some sort of financial constraint. So the further you go into 2026, you're going to remove yourself from some of these great opportunities. It's still going to be soft, but if you're looking for some home runs, I would say if you're looking for that home run, getting into the market sooner than later, you're still going to have to take some time. You're still going to have to see what fits for you, but you want to have as much runway as possible, I think, until September of 2026. The case for waiting, continued price declines expected. The consensus among experts, financial institutions, and government agencies that Vancouver prices will continue to decline into 26. And other major forecasts all predict further price corrections. Economic uncertainty, the deteriorating employment situation in BC, combined with the trade war uncertainty, creates significant risks for buyers who may face income disruption or economic challenges. And the rise in unemployment suggests that economic conditions may worsen before they improve. And that's totally something that can happen. So you're definitely going to have to weigh the risk here. Things can get worse. Things could also perhaps get a little bit better or more stable. I'm not saying that pricing is going to go up, but maybe, sales start to tick up a little bit. And but I think the big thing that you really need to figure out on is, do you want to wait into 2026 to see if there's still this instability? But like I said, those individuals where you're going to see that great value, those are going to erode the further that you get into 2026. Inventory buildup continues. I think that is going to continue to happen. We already have substantial inventory levels now, and there's not going to be any case of it abating anytime soon. And then interest rate cut expectations, September, possibly, 50 basis points before the end of the year, maybe early January, February 2026. We may have that, but I still don't think that's going to be enough to change the market whatsoever. It may help you as a buyer. Interest rate cut expectations are actually going to more drive pricing upwards. When we look at recommendations by buyer type here, first-time home buyers, wait late 2025 or early 2026. If you are a first-time home buyer, if you're starting to get into the spring market now, you're going to want to have some of these properties sit a little bit so you can negotiate a little bit more. If any of these properties are pretty fresh on market, especially coming in after Labor Day, they're not going to have a huge desire to cut on price. With move-up buyers, my recommendation here is to generally wait a little bit with selective exceptions. If you see something that's been on market lagging, you need to attack that right now. If you're an upsized buyer and you're really wanting to get some value, you have to wait for some of these properties to devalue and sit on market at a higher price point. There will be ones that are going to be able to be priced properly, and that's why it's really important to pair yourself with an agent now, just so that you can find those opportunities and move on them. But I think you still have some waiting to do. As we get into that next busy time in September, sellers are going to still want a quote unquote premium, so you might have to wait them out just a little bit. For downsizing buyers, my recommendation is consider selective immediate action only if you have equity in your property. So if you have been holding onto a property for several years, you are hundreds of thousands, perhaps if you're lucky, 7 figures plus in the black, this is a great time to downsize. You can really ensure that you're going to get a great property and then downsize and use those funds in 2 ways. The first way is to get yourself into a really good property at a great value now. And then with those savings, because it's not going to cost you as much in a hot market, just with the stock market the way it is, it gives you some opportunity to be able to talk with your financial advisor and put some money in the market to help with your retirement plan or your current retirement. So I think there's a really great opportunity. And yes, you may not be selling at the peak, but if you've been sitting on your property for quite some time, you have a good amount of equity in that home, you can select a great property purchase now, as well as take advantage of the financial markets too. So you can have a dual prong approach here. When it comes to investment buyers, my recommendation is just to wait. The rental market is very soft right now. Yes, you may be able to get a good product, but if you're not close to cash flowing, or if this is something that is a first-time investment, I don't know if this is the market for you. Perhaps you've done really well in a property purchase. You can buy something for cash or close to cash, and if it cash flow, it makes sense. But keep in mind, if you get an investment now, you are going to get a reduced rate. Luxury buyers, selective immediate action. For qualified buyers, again, if you are in that luxury space, 2.5 million, 3 million plus, there is great value out there. I highlighted this in a previous video, getting a beautiful home in the Morgan Creek area, brand new build, originally listed at 5.5. We got it for 3.8. You couldn't even build that home for that number. There is a lot of reasons for you if you are in that elevated space, as well as if you're looking on the west side of Vancouver, great value right here, right now. International buyers, limited opportunities, careful policy compliance. We do have a foreign buyer ban. If you are a PR right now looking to come back home, a lot of great opportunity, but it's really important to understand your residency status as well as your status in terms of your PR as well. As we start to put a bow on this market outlook and timeline, see for the remainder of 2025, continued price declines of 5 to 8% by end of year. 26, 27, beginning of some market recovery. Pace is dependent on those economic conditions, not only with the Bank of Canada, but our employment and the trade issues with the states. Early signs, including inventory stabilization and increased buyer activity, could start to happen in the latter part of 2026 and then into 2027. And price recovery, lagging activity recovery, as well as a differential recovery by market segment and location. As we go into 2028 and beyond, long-term outlook remains a positive despite current challenges, potential structural changes to market, including reduced foreign participation, and then Vancouver's fundamental value drivers remain intact. And the bigger one, as we get past 28 and into 29 and 30, we are going to be in another housing shortage. There are no housing starts coming up. The only thing that's essentially being built is purpose-built rentals. If you're looking to own something and you're waiting 3, 4, 5 years, you're going to be buying in a very complex environment where there's not going to be a lot of product, and the only product that's going to be available is for those to rent. And I'm going to highlight that in another video moving forward. But as we get out of these next 2+ years, and that's why I'm saying it's going to be slow around 24 months or so, and this is my hypothesis as to what is going to happen here. But keep that very much so in your mind if you're planning on waiting years and years and years for things to continue to dip and dip. I know in the comments people thinking the market's going to shift 40, 50, 60, 70%. It won't happen. It just won't. And when it comes to my final recommendations, and you can read the points here on screen, Wait until late 2025 or early 2026. This is going to be your best opportunity to get that value. And until I see you on the next one, don't forget to book in your strategy call with me. And thank you for your time.